Good morning to all traders. Gold has exploded to new all-time highs this morning, breaking decisively above the October peak of $4,381 and trading up. Towards where would I say the next really important level will be the 4450, and then you've got the 4500. It's Monday, December 22, and this move isn't just a random holiday spike, it's a result of a very specific macro mix hitting the market during a period of thin pre-Christmas liquidity, which of course amplifies every move. So let's break it down. First, why is gold hitting record highs? Well, you see on the daily chart, we have seen, of course, the Fed's kind of pricing in a full easing cycle into 2026. That is why we've seen prices moving higher. After three rate cuts this year, the expectation is for more to come, which pushes down real yields and reduces the opportunity cost of holding gold. Second, the US dollar has been weakening. And let's just switch chart here quickly. You see after the top on November 21st at 100, which is a psychological level, we've seen the gold, the index that is actually just been weakening as those cards get priced in. Um, so third, we have also, of course, other central banks are, on the track to buy near record amounts of gold again in 2025. And that might continue being the case in 2026. They're actively diversifying away from the dollar for different reasons. So there is this sort of effect of concerns about the currency devaluation, and this is the gold is and silver as well. By the way, is a hedge against the sanctions, against geopolitical risks, against monetary value, and it kind of provides this mix of macro is providing a persistent beat onto the market, right? So why today? Well, I guess the move that we see, the spike that will move today above the previous high, it's probably due to the lighter than average holiday trading volume, which means that once buy stops above the old previous high were triggered, there weren't really enough sellers to absorb the demand. Okay, and thus this led to this sharp move to the upside. Now, whether this continues is going to really be dependent on what happens in the short term today and whether uh, the 4,380 becomes a support. Okay, so from a technical perspective, on the 4-hour chart, we do see a clear divergence on the 4-hour, right? You see, that doesn't necessarily mean that we're going to start falling. It means that momentum to the upside is weakening as we reach to new territories. Okay, it's a classic warning of momentum exhaustion. Suggests a pullback, but there is two trading opportunities always in this case because we are also at new highs. One is of course to kind of there's going to be a bullish continuation, and there is two choices. One is it goes straight up to 4.5, and with a potential pullback to 4450. So we're looking to buy the dips. Very important that we hold that level. And in this particular context, I would also like to draw what appears to be here some sort of ascending triangle pattern, okay, which is a bullish pattern, by the way. And we are drawing this because we want to see where exactly is this measured move going to take us. And if we see it's actually taking us, let me just go a little bit lower, 4,460. This is above the 4450, which is a stronger psychological resistance, but it really isn't that the point. What else we also ought to do here, because the reality is that we are looking at it from one perspective only. We want to also see where this could perhaps take us next. So the next level is the 4485 and the 4510, pretty much, right? These are the Fibonacci extensions. So we are looking at, structurally speaking, a similar extension based off the measured move, but we're looking at it as some sort of larger, more larger moves, if that makes sense in terms of scale. um, so what else is here worth mentioning is that apart from the, of course, ascending triangle, we also see this entire structure that could also be considered, an ascending triangle. But then, this why I do mention this is because typically this is like the larger structure, and this is the microstructure, and this typically points to an actual um, fractal. Okay, and for fractals, like to use the bars pattern, because the bars pattern gives us, for example, the exact structure that we saw prices forming from point A to point B. And what we can essentially do is do something similar to see where prices could be heading. Essentially, what we are doing here is that we are going to replicate that structure. Okay, we're going to see where the breakout is, and we kind of came exactly at a similar breakout level. You see, this structure is very similar. The point, though, being that primarily what we want to do is to focus on the extension and the breakout. Okay, because so far we have come up to that level, for example, right? So what we want to do essentially is just take that and put it over here. We're going to see when we broke out, and we broke out around here for me, right? So you see, this points to, at least so far, to 4,440. The main point of this fractal isn't really to find a projection level, though. The main point is to see what happened after the breakout. And in this particular case, we have had a breakout to the upside. So this smaller structure also sees further upside. So for me, it might be a bit of a two scenario situation, because we have the RSI divergence here to take into consideration. But I think in the short term, we ought to see a little bit more upside before that happens. Okay, and this is, of course, where we have a more sort of deeper corrective pullback, which could essentially also end up being a correction, right? So if you trust this RSI divergence on the 4 hour, then you can look for a tactical short position. That would be like, I would be targeting the mean reversion, and the mean reversion for me would be the high activity level, just about the median price action of this triangle pattern. Okay, that brings us to 4,320 or so. So that is a very important level for me. The minor support, I mean, it's not minor support, to be honest, it would be this, because we expect the previous record high to break in this particular case, right? But the bottom line is to still like zoom out. Okay, regardless of what's happening today and this week, the macro case for gold with Fed cuts, central bank buying, and I would say not so persistent geopolitical risks, but still there is that risk, is pointing higher into 2026. Okay, so today's breakout for me is a confirmation of that trend, and it is amplified by thin holiday liquidity. That means that I wouldn't want to be offering a long or a short position here today, because volatility is likely to be high. But personally, I am more leaning towards a short-term upside still, and then potential correction. Okay, everything now revolves around the how price are going to behave around 4,384, whatever the previous high. Okay, so if that holds, we're looking for new highs. If it doesn't, then we're looking for a correction towards 4,320. So good luck and trade safe.